Hello, it's Wednesday, June 12, 2024. It's right after 8 o'clock a.m. Eastern. Here are the levels for today. Now, it's going to be an important day, as we already know. The FOMC announcement is at 2 o'clock. A lot of things going to be happening around 2 to 2:30 p.m., of course, at 8:30 a.m., CPI data release. So that's less than 30 minutes from now, and I'll keep an eye on the pre-market up to that point. So currently, they have continued to kind of move higher in the pre-market thus far, 537.75, and we have some levels that are pretty spread apart. I think it's over 100 S&P points from high to low that I've identified. A zone here, a zone there, and I'm going to zoom out. We're going to take a look at maybe a daily, weekly, monthly chart, at least the daily and the monthly in particular, for a couple of reasons, just to show you kind of what I'm thinking long term. Because for one thing, the 533.07 that they fought for the last several days is way down here, and they're definitely above this. There's nothing bearish about any of the long-term charts. But what's the destination? What's going to happen, say the next couple weeks by the end of this month? Because, well, let's just go to the monthly chart and we'll talk about it. First, the daily chart, and this is the top of this big breakdown candle from June 23. I'll snap a line at the top just to show you what we're talking about. That's the 533.07 right there, that they've been fighting for a while, and they're definitely above it now, this daily chart. And just pay attention now on the daily chart. Volume is pretty low. I mean, there's only a couple times it spiked above this. This is the 90-day moving average. I have a 90-period moving average on every single chart, and seems to be a pretty good litmus test of institutional participation, you could call it. And it's been very low. Like, this is essentially just amateurs driving this thing up for quite a while. Same thing on the weekly chart. Volume is just getting lower and lower on every single one of these weekly candles. We talked about this little doji candle, the time it took them to get this little run here. That was good for a pullback. They did pull back. Well, now that marks the high. They've gotten above and closed above so far, at least 1 week. And now this week here, which we have a few more days. And if they stay above this level, that's pretty important, but consider where they're at in the bigger picture, like the monthly chart, because we've got, 2 more weeks. So let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. This is the 9th week up. We have basically 2 more weeks until the end of the month, end of the quarter. And that's what I want to show you on the monthly chart, because there could be a destination that's not too far above, because everything is very bullish still. There's no reason they can't go higher, but we still have 2 weeks left in the month, and that's what I want to talk about. Okay, here's the monthly chart. First of all, here's the volume so far within almost 2 weeks. This is the scale. So there's been volume this high way back when, crash of 2006, 2007, 8 or so, this little recession, but volume was extremely high. Look how low it is right now as we're climbing up. And we're pretty far extended above all these moving averages. The time it's taken them, I may have mentioned this before once or twice, to where they're at. This is the 21st month from this move. It's been a long time in this very big bullish trend, October of 2022 up till here. And I'm going to put something on the chart for you. It's not something I use a lot, but this is a Fibonacci price extension drawn from this low way back in March of 2020 to this high, the former all-time high of 479.98 down to here before this move here which is going to be 21 months as of this month. So what's in their sights here? I mean, 550 isn't very far above. And I'm just trying to imagine, not saying they're going to do this, but I could picture if they go all the way up and they get above. Well, first of all, you can draw these Fibonacci price extension lines when you get a kind of a pullback at this point and they start to go back up, because you don't know how high they're going to go. I'd like to see it, because I like to do this because it gives you an idea where the 100% retrace. In other words, there's like a kind of a symmetrical move here, which is way up here above 600. But in the meantime, what do? They stalled out at these different levels on the way up. I mean, this is a long time it takes for this to play out, because the monthly chart, but 38.2 moved down. They got up and hit 61.8, got above it, but they moved down. This was, these represent tons of points in the S&P points. Well, they get up close to 75, and right above that is 550, just a big number. 550 even, maybe slightly above that or so. So say they did that. It wouldn't take them. It doesn't seem like it would take them very much to get above or at to 550. in the next couple weeks. And if they pull back and close toward the low of this, where they started, which is way down at, see, the open of this candle is 529, say, which is a big move in the next couple weeks. But if they did this and volume picked up, purely hypothetical, this is all speculation, then what would you have? Essentially, you'd have the right timing, the right signal, the right place for a bigger rollover. Not saying it's going to happen, because you need a lot of institutional participation. You need a lot of the professionals to get in and move price. And right now they have not been for a long time. I mean, really the last several months, it's just been kind of grinding higher on low volume, which is unusual. We're going to need to see volume. But there's a destination somewhere. I don't know where it's at. I mean, I don't know, 600 seems almost impossible, but nothing's impossible. The market could move farther than you can, say, solve it, something like that. Is a pretty well-known adage in trading, because just I'm not going to say I'm the best at predicting timing, but I like to find levels on, at least in the bigger picture, like longer term. But I like to find levels on the shorter term. They tend to work more often than not. But just looking at the monthly chart, like the question is, where are they going? Time is pretty important. Price, it's also important, but the time it takes to get a certain place, to me, gives the indication of where that ultimate destination is, even if it just takes a while for that consolidation to happen and them to roll over. I hope this makes sense. I'm just looking at the big picture, trying to figure out if they're going to go higher, where are they going. Still going to trust my levels. These are the ones that we're going to come back to after the market closes to analyze what happened. Definitely do not want to be in a trade or at or around 2. And I'll give it some time to settle in after that, 2:30, 3 o'clock. And then at that point, I'm not interested in being in the market after 3:30 anyway, as you probably know that so far. So we'll come back to this chart after the market closes and take a look at the trades that may or may not happen today. See you then. It's now after 9 p.m. Kind of had an interesting day, in my opinion. Here's what the spiders did. We'll move this down so we can get a better picture of everything. They didn't behave exactly as I expected. And I did record the pre-market. I want to show you what happened there, because that was kind of gave the feeling, for me at least, that I didn't really want to take any trades, because I expected them, where they were getting ready to open, I expected them to either come down and I was going to buy here, because I had a feeling they were going to push higher based on the way they were acting in the pre-market, or they would go up into this zone and I would sell somewhere in the zone for a pullback. But after 9:45, they were right above this zone, and I didn't take any trades. So there is no recording of me taking trades, but I will show you the recording of the pre-market. Let's just look at that right now. I just want to show this to you, just to kind of give you an idea of what I was thinking. So this is right before 8:30. So remember, there was a CPI data release at 8:30. So I'm going to start playing this at sped up 16x. So it's pretty fast. It was already fast in real time anyway. And a little bit of a kind of a glitch in the E-minis. It took about 30 seconds or so before they caught up. But they more or less went through this level, and they came up into the zone. And for the next while, I'll just kind of scrub ahead, they just sort of consolidated under this zone. So it looked like they're going to go higher. But like I said, I knew the zone was important. I thought it'd provide a reaction in the opposite direction for a short trade if they got up there. But when let's just go back to the full day, because you see what happens. This stops, let's see, how far did I go? So 9 o'clock or so before I stop recording this. So when you go back to the full day, once again, you can see that this candle here is the 9:45 candle. They closed just pennies above the top of this zone. So I kind of watched them do their thing, and ultimately they bounced off this level. It was pretty important. This whole zone was important. Here's the 2 o'clock data release, FOMC announcement, and they moved, but not a whole lot, all things considered. And then they finally got below. So essentially the day was kind of more or less on the flat line. They opened around this area and closed not too far away from it. So let's just say, strictly playing by the rules, what you would have done. Say you did go ahead and buy right here at the close of the 9:45 candle. Well, let's just expand this so I can show you where your profit objective would have been. You want to bounce them. You would wanted them to bounce up 40 cents. So 543 basically even. So there's your profit target. And, right down here somewhere is the fumble threshold, which they never got down before they would have given a profit. But what they do, they came up really close a few times. So 90, yeah. So basically 10 cents away, but came down, and that kind of, I don't know, that wouldn't have felt right. This would not have been a very easy trade. I mean, you could have bought anywhere in the middle of this. That was the intent. But I really was thinking the whole time that I wanted to sell up here. I really wasn't planning to buy here for any move higher, but they end up going, how'd they get? All-time highs again, 544.12 or so. So ultimately, if you were playing by the rules, if you withstood this, you could have got a base hit. I'm not going to count it. Even this here, like they got a high of 1 penny away from your profit target. Now, granted, in the E-minis, this may have given you your 4 points, but I wasn't in it. Just kind of watched this. Didn't really feel right. And the volume was relatively low, as suspected. And even during all this mess at the FOMC announcement, there really wasn't the institutional buying, like the high contract lot size that I like to track. So no trades to look at. I'm not going to count this any points. No trades taken, or like say you took the trade, it would have been a wash. Essentially, I'll just explain what would have happened. You would have bought here, and when it came up within 10 cents or so of the profit target, the SPY chart, then immediately came down, a minute or two later into your entry point, you would have just jumped out at a wash or maybe a slight loss or so. That's, strictly playing by the rules, but no actual trades for me. So the first log hit this level here, but if you'd entered it, you would have jumped out at a wash when it came back down to the entry point because of that near miss of the profit target and such a quick pullback. I just didn't take any trades, so this is me here. No trades, so 0 points for the day. Take a look at all those. Anyway, not exactly what I expected. I want to show you a daily chart now. Just want to show you here that this is the candle that it produced today. Not a ton of volume, still slightly under the 90 period or the 90-day moving average. Kind of gave like a somewhat of a doji candle here. I think it's the 9th day up, so timing's about right here. And also, when you look at smaller time frames, I won't go into them at this point, like say the hourly chart, it looked like they were kind of setting up for kind of a bullish consolidation pattern where they would go higher, but they kind of look like it's starting to fail. So 542.23 is where they're at currently in the post market. That could definitely change by tomorrow morning. So just kind of look at this at face value. I mean, I don't know. I'm not going to make the determination or prediction of what they're going to do tomorrow or until I see the pre-market, and we'll do that in the morning. But this is the way they ended, and just kind of an interesting. Really not a lot of follow through. Essentially, you typically would have a lot more move and then some kind of a direction for the rest of the day, not to end on the flat line. I'll talk about an FOMC day. It was what normally you would see, but today it was just kind of a bit of a letdown. Anyway, no trades. We'll come back tomorrow and do this all over again. Thanks for watching. Have a great day.